what's happened with Salesforce is a little bit different than some of the other companies like a NVIDIA, where we've seen that growth just compound and compound and compound. And now that expectation is much, much lower. It's single digits, like you guys said. So I actually think that there is an underestimation, if you will. People are expecting single growth. I think they could actually put out their double-digit growth, which would be monumental. That would be huge here. I think this is a company that can live up to and beat these expectations here. So I am really bullish here. Now, the stock technically is in no man's land. It is really nowhere here. But because of the situation where the expectation actually is not real high, I love that upside. I love this to beat what the expectations are. So I am putting on a bullish call spread here. So what I'm doing, this is a diagonal call spread. I'm buying next week's 335 call. Okay. To finance that, to bring down my cost, I'm selling this week's 345 call. So basically I have a $10 wide spread, but I'm also buying 1 week of time here. I can do that for about $3. Now, if this thing tanks, if the stock doesn't go up at all, okay, that is my risk. I cannot lose more than what I'm paying for this. But to the upside here, boy, there is a lot of room to run. And the reason I selected those strikes is because the market is pricing in just about a 10% move, just under a 10% move. So to the upside here, that's targeting right in the 340 to 345 area here. And if we get there, this thing is a big, big home run of a trade. If it doesn't, okay, it gives me time to adjust, to roll out. But again, I know what my risk is. It's the $3 I pay for this particular strategy.
I like that because the move to 335 versus above 340 in the short term, that seems like a good one to fade the near term. Is it 340 or 345 strike, Scott, that you're selling?
Well, I'm selling the 345, but even if we make a move to 335 here, Oliver, this thing is a massive winner
for sure.
So
you don't lose if the thing goes up this week.
It's pretty much not at all. So I am looking for that again. I'm bullish. If they come out and even if they beat earnings, but their guidance is light, like we have seen with other companies here, perhaps the stock does go down. But again, I know my risk. That's the important part of this. Cannot lose more than what I'm paying for this. And, as always, that's what I'm going to base my allocation on, is what my risk is.
Let's say short term, it gets hit. Do you look at the sale of the 345 and go, okay, cool, I lost less than I would have if I just owned this call, let me bail? Or is the point of the calendar to see it through both expiries?
I probably don't want to hold this till next week because I don't want to lose all of the premium, all of the extrinsic value in the option for next week. So I probably would bail at least by the end of this week. Maybe I give it a day or to Friday, but I would probably bail by the end of the week so that I don't lose all the premium on the 335 call.
Okay. It's pretty impressive that you can get the premium in those 345s because the market maker move at $27 leaves us below that. The market maker move only takes us to 330. So someone out there is betting at the end of this week, you've got an extension post earnings past the expected implied move for a monster rip, which might be more a function of like NVIDIA earnings than Salesforce.
It absolutely could be. I mean, there is so much, hinging in this marketplace on NVIDIA earnings for other stocks in the sector and, quite frankly, the market overall. So could be a little combination of that as well. But again, that's why this 345 call this week is so expensive. There's so much volatility. There's so much premium priced into that.